So what we're going to look at here is how a cash flow forecast works. It's pretty straightforward. What you do is you've got all of the total receipts for each week or each month of a particular trading period. Obviously, you've got January 2019 here. Your exam questions might be different, and you have a total for all of those receipts, all of the money that's received, the inflows. So you've taken £900 on the tills for food orders, £300 for drinks, £58 for desserts, and you add those three together. Now, on a different cash flow forecast, you might have something slightly different. You might have more individual items that are being added up. You then have the total payments. I'm just going to actually make this bold as well while we're here. And an exam paper might have all the total payments on it, which is all your outflows. For example, things like ingredients each week, staff wages, utilities, and shop rent. So we're there with all of that, and we add those together. Then you have this thing called net cash flow, which is the difference between the two. So what we're really doing there for net cash flow is we're taking the total receipts, all the money made, and we're minusing the total payments, how much we've had to pay out for different things. We end up with this total cash flow. So the total cash flow would be equal to 1,258 minus 640. So that minus that gives us 618. The opening balance is what money you've been given to run the business at the beginning of the week. So what's carried forward usually, what's there ready to go. So money the company currently has. So Mian's Pizza Shop already had £800 from the previous month. So we call that the opening balance. That's what's in our bank account at the moment. Our closing balance then is worked out from this net cash flow, which is the difference between the inflow and the outflow. So that taken away or added to the opening balance. If this number's positive, we add it. So what we're doing here is we're taking this opening balance of £800 and adding 618 to it. We end up with 1,418. Okay, then you've got something called the opening balance for the next week, which will essentially be the closing balance from the previous week, and we're just carrying that forward. And then the whole process is repeated again. I'm just going to show you what happens though when you have negative numbers in this net cash flow. So with this particular scenario, my restaurant's not doing too well. I'm actually making minus £522 at the end of the trading month. Um, what's happened here is obviously you can see my inflows are not covering my outflows. I'm paying £200 for staff wages, £100 for ingredients, and that's already far exceeding my £288 for receipts, because obviously those two just added together 300. Utilities like electricity and gas are £40, and the shop rent is £100. So that's making a huge figure in terms of the difference. So I'm paying more out than I'm making. And as a result, I have negative cash flow, negative net cash flow. Remember, net means what we keep once everything's been settled up. So we're paying more out than we're receiving, so we have negative net cash flow, which is a problem. And it says minus 152. So in order to work out the closing balance, I don't add the opening to the net, which is what we did in the previous one. I take away the net cash flow from the opening balance. So what I do is this, I go, it's equal to the opening balance of 200, okay, minus £152. We're not minusing minus £152. It's not some weird sort of mathematical jiggery pokery. We're just saying actually that we're negative figures. So the closing balance will be whatever the net cash flow is taken away from the closing balance, because that's actually a negative. Okay, so we take away 152 because that's a negative. Press enter, so 48. And it would be the same there then again. So you're taking 150 because that's the net cash flow. That's the difference between the total receipts and the total payments. You're taking that 150 away from 48, and that makes minus 102. And I'm doing really badly then. If you look again, my net cash flows minus 380 in this month. I'm spending way more than I'm actually making. And as a result, as well as having a minus opening balance, I'm now having 102 or minus 102 minus 380. So what we're ending up with is 482. So it gets worse and worse and worse. So minus 102, take away 380, we get minus 482. And by the end of the month, obviously, I'm really going downhill. So that's how we work out a cash flow forecast. The important thing to remember is the net cash flow is your total receipts, that's the money you're making from all your inflows, minus your total payments, which is all of your cash outflows together. And that's your net cash flow. And that's an important one to be aware of because it can either be negative, i.e. with a minus number, or it can be positive, just a standard number. And that affects how we calculate the closing balance because, again, as I said, if it's negative, we're taking that number away from the opening balance. And if it's positive, we're adding it to the opening balance. And that really is the golden rule with cash flow forecasting. If you're very lucky, you might get a 6-mark question or a 4-mark question on this. And that's a really nice one. That will up your grade boundary if you can get the hang of doing this.